Good afternoon and welcome to Unlock the Stock. Today, we're pleased to welcome Curro to this platform, which is specifically designed for investors to gain access to corporate management and to get to know them and their companies better. Unlock the Stock is only possible with our technology partner, Lumi Global, and you can visit their website, lumiglobal.com, to learn more about their various online AGM and investor presentation solutions. Our host, as always, will be the finance ghost and Mark Tobin from Coffee Microcaps, and they will be facilitating the Q&A session. This event is sponsored by A2X, a stock exchange that plays an integral part in the progression of South Africa's financial markets. A2X is the second largest stock exchange in Africa as measured by market cap, with 176 securities listed on the platform, including 30 top 40 stocks, with a current combined market cap of 10.7 trillion rand. The team at A2X are proud to be partnering with Unlock the Stock. Just as this platform unlocks value through insights and analysis, so too does A2X unlock stock with the stocks listed on its platform, helping to drive the market forward. And today we'd like to welcome Cobus Loubser, the CEO of Curro. But before we start, just want to go through a few housekeeping notes. If we could move to those slides, that'd be great. Thank you. Cobus will take you through his presentation, which will be followed by a Q&A. Please note that you'll be able to post questions by typing them into the Q&A box at the bottom of your screen. This event is being recorded and will be available on the Unlock the Stock YouTube channel soon. And you'll see an email address when we begin the Q&A. And if you'd like to be added to Curro's distribution list, please do send an email to that address. Cobus, without further ado, I'm going to ask you to please share your screen and perhaps just talk us through your presentation. Thanks, Cobus.
Thank you, Deborah. Right, so good afternoon, everybody, and thanks for taking an interest really in Curro. I've got quite a few slides here. Many of them you may well be familiar with in terms of past presentations. So I'm going to scroll through them reasonably quickly, and the intention is to then, I think, get to the question and answer stuff, which may well be where most of you are kind of interested. Sorry, I just want to get this screen that's a little bit better, a bit more front on. Okay, so let's, without further ado, let's get into the presentation. So I think I'm going to give you a very quick business overview. I'm going to talk to our strategic focus, really sort of pick up a few items in the financial end and then allow for questions. So when we kind of think about Curro, I think the best way to think about the business is in chapters. The group has been around for 25 years, but very much the first phase of it, after the initial establishment was aggressive and rapid expansion. This particular graph just gives you a perspective on how many schools were either acquired and or developed ourselves over the last 15 or so years. And you can see how we've entered a phase now where it's a little bit more about filling capacity and about optimizing the portfolio that we have. I think in terms of learner growth, pretty clear that the kind of growth that we've achieved, and it's been fundamentally across different models which cater to different price points and different catchment areas. And we generally have those organized relative to what we call brands. So, Curro, the Select portfolio would be more sort of higher-end, more expensive schools, perhaps. And then at lower price points, Academy, and then the lowest price points would be Meridian. In terms of the business, I think it's important to appreciate that it is still relatively young. So roughly a third of the portfolio established before 2012, a third between 2013 and 16, and a third between 2017 and 2023. Now, that's important because it takes us about 7 to 10 years for a school to mature to a reasonable kind of level of yield. So that's just the perspective on, we think we kind of still on that path to maturity. I think a really important slide about our business is the extent to which we have this potential for growth going forward, and that's really based on this concept of rollover. So if you have learners in grade 8, and they go to grade 9 and 10 and 11 and 12 and so on, that gives you sort of pent-up demand or propensity to grow. And just in very simple terms, if you look at our high schools in particular, in grade 8 we have just under 7,000 learners in 2023, and in the same year of 2023 we have 4,200 learners in grade 12. And that number in grade 12, was 2,400 in 2019. So it just gives you a perspective on what we think is the expected high school demand growth, and we think that could be it's anywhere between 7,000 and 10,000 learners over the next kind of 4 to 5 years. So with all of that being said, so a business that's come through a stage of rapid establishment and then one of recently more sort of operational emphasis, sophistication and margin, and which has potential for growth. What are we focusing on strategically? So here's a graph that just gives you a perspective on the simple capacity that's been established in our operation. So you can see in blue the extent to which we're filling that capacity at the moment, and in grey the headroom capacity that's still available. And overall, we're at about 72% of the built capacity on our campuses. So we've got about 30,000 learners that we can add without necessarily having to add too much extra in terms of classrooms. I'll explain that in a bit more detail later. So we have capacity to increase shareholder returns, and I would submit also a lot of experience gained over the last 2 or so decades. So how are we looking to drive shareholder returns? Really sort of 3 fundamental pillars. The first one is revenue growth. The second, the ability to increase our operating margin. And then the third, the extent to which we contain capex spend and drive, kind of excess cash, if you will, to shareholders. So if you kind of stand still at revenue growth for the moment, I think I've explained the rollover potential that we have, particularly in high school. Certainly for the year, the first half of this year, our learner growth was only about 3%, and that follows quite disciplined termination of overdue accounts across our portfolio, and certainly the extent to which interest rates on those things have gone up, and inflation pressure and energy and fuel, that has exerted pressure on our consumer in South Africa, and we certainly felt that. But I think we've responded to be very disciplined about kind of payment of accounts. If you look at that sort of revenue growth, I think it's important to also appreciate that this business has significant operating leverage available to it. So the extent to which we add more learners to existing built classrooms and facilities offers a lot of operating leverage. But we can't become a good business one day when we have a certain amount of learners. We have to be a good business every day. And that brings me to operating margin and the extent to which that for me is a mark of a quality management team, our ability to either sustain an operating margin in difficult times and or to grow that relative to the opportunity before us. So in this particular space, we've seen a nice recovery in our ancillary revenue services, and that would be things like bus services and aftercare and boarding. We've been containing our discount spend. Bad debt cost has been coming down a little bit. And then, we really think there is efficiency still available to us in the staff cost line as the overall operations mature, and then just generally tight operational discipline to contain costs. And then the issue of capex spend. Now, for really about 25 years, we've consistently spent more on capex than what we've generated in cash, but we have reached that point where the existing business on a like-for-like basis requires less capex, and that bodes well for free cash generation and the ability to enhance shareholder returns in a range of ways, and I'll pick up on that later. So in summary then, when it comes to strategy, I think we've created different platforms to offer quality education. Our models are efficient, they are scalable, and they certainly have the opportunity to drive up profitability. And certainly I think we've demonstrated a degree of resilience, and we're well on track to increase our shareholder returns. I'm going to run through a few aspects on the financial front, and then after that we'll take some questions. So I think just for everybody's benefit, or in summary, Our earnings per share increased by 35% in 2022 on the previous year, from just call it 41 cents to 55 cents. And if you then kind of look at it for the first half of this year, we kind of continuing that trajectory with the recurring headline earnings at 35 cents relative to 25 cents the previous first half. Highlights really for us, I guess, is that in this particular first half, we didn't have extravagant learner growth, so 3% on a weighted basis, but we're able to drive revenue up 16%, EBITDA up 21%, and that recurring headline earnings number or headline earnings numbers both up handsomely. I'm going to deal with the cash generated in a later slide. Just scrolling through things quickly, we've taken to providing quarterly information to shareholders in our results presentation. So just visually, just what you can kind of expect to see. Clearly, revenue would be tracking learner growth to some extent, but also would be a function of the kind of fee increases that we put through. And we've generally, for the last 2 or so years, we have extended fee increases or school fee increases of about 2% above the prevailing inflation. And then that kind of increase was further augmented by a recovery in our ancillary revenue increase, ancillary revenue streams. Just another visual on how the fee revenue kind of compares, and on the overall basis, 14% up in this first half. If you then look at ancillary revenue, you can see a nice improvement if you compare it quarter by quarter over the last sort of 3 years or 2.5 years. And all in all, I think we expect that recovery to continue. If you look at operating expenses, that'll generally track a combination of inflation and learner growth, albeit in this particular first half of 2023, we were able to increase revenue by 16% and expenses by 15%. So that's enabled operating margin to expand, which, of course, is powerful. I mean, our overall operating margin increased from 15.3% to 17% in this half. I think total staff cost increased by 11%, but if you were to look at that, and staff costs would constitute about 2/3 of total expenses and about half of 50% or so of revenue. That number went up on a like-for-like basis by 8%, being 6% of inflation and 2% of learner growth. In terms of trade receivables, certainly an issue if you look at bad debt and so on for this business over the last few years. 2020, I think, was quite challenging, and we saw a real spike. I mean, of kind of below 2% in 2019, and then kicking on to nearly 6% in 2020. And we've worked hard over the last 3 years to bring that back, to drive up collections, to improve the quality of the book, and to ultimately, I think, we're certainly making good headway there. And at this stage, what we call bad debt related costs, being the combination not just of bad debts and provisions, but also of collection costs. That number is now below 4% at 3.8%, and we think there's an opportunity in the medium term, next 2 years or so, for that to drive lower. A bit of information on just the flow over time. I think the kind of provision levels per half is starting to stabilize, and certainly the quality of the book in terms of both aging and amounts outstanding has improved quite markedly over the last sort of 18 months. And then just for what it's worth, the debtors book really consists of 2 books, one for learners who are still in the school, so we call that the active book, and then the other half being for learners who has left the school or which accounts have been terminated, and that's the inactive book. And both of those obviously provided consistently over time. In terms of funding and cash flows, our business now have total net debts of about 3 billion, 2.99 billion, slightly lower than what it was in December 2022. Our credit rating was also upgraded in this half. And I think certainly, if you look at the increase in finance costs, about half of that increase from 100 to 130 million related to the increase in the interest rates, and the other half to slightly more debt during the period on a weighted basis. I think important to maybe state is that we think that this is a level of debt that the business will sustain, and we will automatically de-gear as the business sort of profit performance increases. So it's a level that we're very comfortable with, and that we think allows us to hold a level of kind of permanent capital funded by debt in the business, and look after shareholders. I think from a cash flow perspective, cash from operating activities increased by a mere 2%. But if you really unpack that, we had some big capex projects on the go at the end of last year, and that affected the creditors that was outstanding. Less creditors outstanding in this half, and so that really kind of was much of the kind of put a bit of pressure on that operating cash flows. But overall, 600 million generated there, and I think for the full year we would expect that kind of thing to dissipate. If you think about the cash flow profile of our business, we would typically receive large upfront cash payments from parents, over 300 million, for instance, this year. And we would be providing also for a 13th check payment in December every year, which would typically take up cash out in December. But during the year, of course, we have that on hand. Our capex profile is typically also kind of weighted to the second half of the year. In terms of just other key items on this first 6 months of most recently of cash flows, we have repurchased shares up to June of 19 million rand, which has been cancelled. We've also purchased some shares for our share plan, and there was a dividend payment. If we look at just the share purchase issue, I think I said we bought 2.4 million shares up to June for 19 million, and have cumulatively up to around about the sort of date of our interim result release last week, purchased a total of 10 million shares for 88 million rand, and those have been cancelled, and of course the number of shares decreased. I think the key kind of point around share repurchases, it's a capital allocation decision that I think as a management team and as a board we will place to make when we think there's an opportunity to drive long-term value for shareholders. It doesn't necessarily have to be kind of either dividend or share repurchases. We'll take a view on this at each results moment as we move forward. But I think the key message is that we're seeking to drive shareholder value over the long term. I think capex is certainly, we've invested billions in this business over the years, and I think in this first half, we've invested 312 million. Last year was 550 million. And overall, we expect to invest as much as 800 million rand in capex during 2023. And that, I think, gets us to the question moment. So I'm going to pause now, and I think Deborah and Mark and the team, you can guide the Q&A.
Thanks very much for that, Cobus, and I'm going to hand over to Mark and the finance ghost. Thanks,
Deborah. Thanks, Cobus. I'm going to take the first one, and obviously, as usual, to our attendees, just please pop your questions through in the chat. There's obviously only one company presenting today, so we're not doing the breakout rooms that we sometimes have where we have two companies. So you can just send them directly to Mark, you can send them to me, and then we can ask them obviously to Cobus. So Cobus, first one, certainly from my side, I guess one of the themes that tends to come up when people talk about Curro is immigration of the South African middle class, for want of a better description. Just any commentary around, what sort of impact do you guys think that is having potentially on your growth? Is it a case of just it's maybe causing slower growth? Are you not necessarily seeing it that much? And is there a risk that you become saturated in some areas in terms of supply of schools, that people are leaving, and then you end up with a supply-demand imbalance elsewhere in the country? Semigration is as much of a trend as immigration. So I guess just any comments on what you're seeing there.
Yeah, thanks. It's It's an interesting issue, I guess. As South Africans, I think we should be disappointed and concerned the extent to which we lose, top talent and skill from our shores. So that's a concern as a South African. I should add, though, that there are also people kind of returning; they're not just leaving. But yeah, so if I reflect on it, in 2022, we had 800 learners leave our business due to immigration. That number year to date is about 160 for the first 8 months of this year. So it's a meaningful number, but it's not, if you kind of were to put it relative to our overall learner count of about 72,000 learners, it's maybe 1% last year. This year, obviously less. I think the issues of immigration and, or semigration, there's still tremendous urbanization happening in the major metropoles of our country, which is substantially where our schools are located. We have certainly, I think, benefited from the semigration trend to the coast, where we also have some schools located, and they've been able to pick up some of that. And we do find that people they seem to be making their kind of relocation decisions based on the availability of a school like Curro in the area. So that helps. And I think insofar as whether it's creating potentially, kind of holes, if you want to use the term, I think our schools are generally positioned at a range of different price points and really have lots of pent-up demand and so on. So I think for the moment it's not the biggest concern, I guess, for our business, but back to my initial comment, as a South African, it is a concern.
Cobus, well, just before I start, I just want to mention I'm a small shareholder in Curro, just for the interests of transparency. We've seen a lot of noise and more of it this week around the Bella education bill. For anybody who doesn't really follow the education sector, it's more of a kind of an update to the South African Schools Act, which kind of runs over a lot of the education sector here in South Africa. Regulatory risks for the Curro business. I appreciate, there's a private school versus a public or state school, but is there anything there that concerns you, or you think could be a risk, or maybe even a benefit?
Yeah, I mean, I guess if you talk to legislators, they will always be doing something to manage a risk or to drive accountability, etc. So, I mean, let's just say legislators have good intentions. I think if you got to kind of understand the education market when you think about these things. So just for the listeners, I mean, the kind of 3 key things which this Education Adjustment Act seem to be there's a lot of talk about, that is the potential impact on school governing bodies and the ability de facto for communities to sort of run their schools. The potential impact on language decisions in schools, which kind of similar issue around how communities can drive outcomes. And then there's some things around whether you can sell liquor at the school and so on. I mean, that's for the moment. I guess I don't want to get into that in too much detail. So I think, insofar as does it affect us as a business, not so much, because we are independent school operators, so we don't have a governing body, and our language policies are commercial decisions, not things that's determined by a state. I think it's important to stand back, though, and say, well, what does the education landscape look like? Now, there's about 25,000 schools in South Africa who cater for about 13 million learners. And of those schools, 2,000 are private schools who cater for about 700,000 learners. And then there's another 2,000 schools who are state-owned schools, call them Quintile 5 or Model C schools, who are by and large managed by governing bodies, and would also cater for just over 700,000 learners. And then you've got 21,000 schools run by the state per se. So I think these kind of Model C or Quintile 5 schools would hold many of the sort of well-known names in the country in that kind of cohort. These are schools that's been around for a long time. It's been well managed. That serve like a lot of talent up into our sports teams, into universities, into success in general, and they play a very, very important role in education in South Africa. So I would say that private education has come to augment the state over the last, say, 2 decades quite strongly. It's more than doubled, and these other Model C kind of schools are quite important also to the kind of talent factory, if you will, of youth in South Africa. And I think it would be concerning if that's disrupted or distorted or somehow kind of attacked. Now, I can't really see that playing out to quite that sort of level, but it would be good for South Africa, for those schools, I think, to continue, because they are certainly offering great education on grounds which parents are not paying for, because it's been paid for over the last 100 years in many instances. So they're formidable competitors to us as private operators. But yeah, so other than that, I think that the Act must still go through various processes, and hopefully will kind of be sort of promulgated and executed properly and responsibly.
Something from my side, Curro, is just in understanding the business a little bit more. So Curro has got different price points. It's something you alluded to when you answered my last question. And I think just understanding a bit more about the competitive landscape and how you guys see that playing out. So the one question I had is, to what extent is it premium level schools, and what does that mean? Like, at what point would you decide the annual school fees are starting to get into a premium level? Obviously, at an extreme, you get the kind of private schools where people are literally fighting over each other to live in the area close to the school. I mean, Cape Town is notoriously bad for that. That's quite an extreme. But I'm just keen to understand, at what point do you see yourself as premium, and then what is the growth opportunity for Curro, potentially in the rest of Africa as well? So it's 2 separate questions. Just trying to understand a little bit about some of the growth levers you can pull.
Yeah. So I think we'd like to think that everything we offer is premium. But I think in terms of trying to offer sort of a price point, and let's call it an opportunity to quality education, the ways to do that would be to kind of have different levels of facilities. So do you have the synthetic pitch and the enclosed pool and additional fields and all that kind of stuff, or do you have less fields? And then another mechanism would be to look at the number of learners in a class and the particular curriculum that you apply. And then there are kind of issues around, if you buy a school, what you pay for it, because that to some extent will determine how you kind of position it and drive the yield. And then there's I think there's a range of things to consider. I think what happened with us is that about 2/3 of our portfolio, a little bit less even, it's about less than 60%. Would be kind of offering the IEB, and would be doing so in classes with around about 20 to 25 learners in a class, and would generally be positioned in more affluent suburbs. So your location obviously is a key piece to this puzzle as well. And then about 40% of learners are in schools doing the national curriculum, and are maybe in we've taken schools to townships and are offering great education within that kind of environment, based on the kind of urbanization that we've seen across the country. So we think there's much more opportunity to be had, but this is a kind of a long capital cycle business. It takes time for you to put an expensive asset down and to garner a proper yield from it. So at this stage, we have a large portfolio spread across the country, and we have capacity that we want to fill, and we don't have to chase anything at this stage. We think we're well located relative to the opportunity sets, and that's kind of how we look at that. So is there more opportunity? Yes. We prefer to focus that within our existing portfolio, but we're always keeping an eye out for new developing areas.
Kubis, maybe just to follow on from that, I mean, if we look at the latest result, margins have kind of stabilized back around what they were in 2019 with, the focus to filling capacity, optimization, an expansion of the digital offering. Is it, if we look out on the medium term, and you can define that in 3 years, 5 years, whatever you want, is a 30% EBITDA margin a possibility if we're looking at seeing here 3 years down the line or 5 years down the line for Curro?
It's a good question. We have schools who run at that kind of level. So from that perspective, is it possible? Of course it's possible, but I think I've got to caution also that if I tell you we're going to do a 30% EBITDA, people put it in models and they expect it next week. So it is a long capital cycle. And
hence my medium-term caveat.
Yeah, well, there's that. But then, things aren't always evenly dispersed. So I think the kind of key thing for me is, I think I made the comment earlier, we have to be a good business every day. We can't become one day when we have X amount of learners. So I think from that perspective, we're going to keep working at that operating margin, and we're going to keep squeezing it up. And we have opportunity to do so. And that should get us, kind of into the mid-20s in terms of EBITDA margin. And then operating leverage becomes very powerful as learners kind of fill up capacity. So that in itself, will get to the high sort of 20s and potentially touch 30. But from a modeling perspective, I'd probably caution to model sort of 20s, late 20s maybe, but be a little bit patient because it's going to take a while. And certainly in this kind of economic moment, it's tough out there. Consumers are under pressure. So and operating leverage will be the key. So between sort of maybe 25-6% and 30% is really just the sheer power of operating leverage on the existing operation. And it's difficult to predict quite how powerfully that'll come through over the next few years. So yes, it is possible. We are running that in some of our schools.
Cobus, I find the M&A side of this really, really interesting in terms of the acquisitive growth. And, this is another financial question. I've got a couple of others in my DMs I'll get to now, but I do want to get through this one. So when you look at acquisition opportunities, I'm assuming that a big part of the appeal is to get the site, because you can't just drive around and decide you're going to put a school somewhere where you'd love to have one. Life is not that simple. So I suppose what will be interesting for investors to understand is, what is the process you go through in your mind when you decide to acquire a school? Why would you do it? What are you looking for? Will you buy a fixer-upper sometimes? Does it always get rebranded to a Curro? Does it not get rebranded to a Curro, for those who aren't familiar with the group? Just understanding to what role or to what extent you play that market consolidator in private schooling and how you go about doing it.
Yeah, I think there's a lot to that question, but let's just go through them. So the first thing is that we have generally acquired schools and maintained their identity, generally speaking. So we have a portfolio within the business that we call Select, and acquired schools have been managed within that portfolio, where they've received all the benefit of being part of the Curro group and everything that pertains to it, but have been able to continue. We have a school in Newcastle that's 125 years old. And that's precious to have that kind of brand and equity in a community and in an area. And so we don't have to stamp our label on anything. And I think it's a case of allowing a school to continue and to be successful in offering what it's supposed to do, which is quality education. I think the second thing is that I think we have a good appreciation for what goes on in South Africa. We have a large portfolio across the country, so we have a sense of where there are opportunities. And of course, there occasionally you may want to extend your reach. And so you're right, it can be convenient or good to acquire a school, but of course it must be available for sale. Over the years, we have we've acquired schools that may have been run by philanthropic kind of organizations who kind of needed help. So not quite a fixer-upper, but people who were keen to tap into our expertise. And that's been very valuable and good kind of partnerships. But by and large, if you stand back and you just give a cold commercial objective view on the world, whenever you acquire something in a business, it must generate or have a reasonable chance of generating an attractive return for you. So it can't just be about position. It can't just be about, it'll fit nicely or whatever. It must be capable of yielding an attractive return. And that's partly a function of what you pay for it, and then also a function of what you can do with it. And of course, we have confidence in our ability to bring our prowess to a school and to drive potentially costs down, bring benefits of scale to the table, and very often help a school to grow, because sometimes the credibility that we attach to a particular site really sort of unlocks more opportunity, and parents trust the school. So there's a range of reasons to do it. But yeah, so I think we're always on the lookout for opportunities, but we don't have to chase too much at this stage. We're happy to consider and to review, but we're not going to fall over ourselves just to somehow cobble together more schools. We've got a large portfolio already.
Best one from me. You alluded to it in your presentation quite a bit. Just on capital allocation and shareholder returns. I mean, given where the valuation is currently, how does the board think about balancing the dividend policy versus buybacks versus capex? Just give us maybe a sense of kind of what the thinking is there currently in trying to allocate more or less to those different buckets in order to drive shareholder returns in the kind of longer term.
Yeah, I think the first thing is we have nearly 800,000 square meters of buildings and 182 schools and nearly 80 campuses. So we have an obligation to maintain those sites, to refurbish them, to replace assets, to keep it shiny, and to keep offering excellent education within its corridors and in its walls. So and we will do that. So that's the initial kind of filter that you get through. So, well, we've got to do that. And that is probably got a price tag of about 300 to 400 million rand per year in today's terms. So that you start there. So, well, generate free cash. What are you going to do? Well, you've got to look after what you've got. Then beyond that, you have options to expand the portfolio, to add facilities, to acquire other schools, to pay dividends, or to kind of do share repurchase. And each of those are capital allocation decision, and each of them is a function of what's good for the business and its achievement, and of naturally for shareholders. So I think where we are is we've had I kind of break backwards and say we have declared dividends in the past, and we'll keep paying dividends in the future. But that policy will be reviewed and refined and adjusted in due course as the board sees fit, and as obviously cash generation increases. I think akin to that, you then have a choice: is if you are generating more cash, do you pay greater dividends, and or do you kind of use some of that cash to buy back shares? Now that's really a function of do we think we can acquire shares at reasonable value and drive long-term shareholder value creation? And I think it'll be probably a combination of the two. It's not either or. And timing to some extent sometimes matters with that. But I think insofar as, so step one is make sure the existing estate is well looked after. Step two is be alert to opportunities and make sure that we can execute on that. Now, we have debt capacity available still within the existing kind of debt arrangements and funding arrangements. And we would certainly in due course be able to add more debt if necessary, if there's a really attractive opportunity that we wish to fund. And then, for the balance of it, it's about deploying that cash to shareholders. So I think we've started with some buybacks. We've had a general authority for some time, and we just felt it was an opportune moment to take some excess cash and acquire shares. And we'll keep reviewing as we carry on. But it's not a US style kind of a big announcement, buyback billions kind of thing. It's I think a very considered, responsible approach to capital allocation. And I think, if you appreciate, you look at our balance sheet, our return on net assets invested at this stage is 6%. Our return on equity is a little bit below that. We've got work to do to drive the returns that we generate on our assets up to the kind of 14-15% cost of capital for the business, and that'll take time. It'll take years, but I think we well located to drive that journey, and I think we've demonstrated good progress over the last few years.
Curro, I have a question in my DMs that is quite interesting. So you'll be pleased to know that whoever asked this said, it seems like profit is taking care of itself, which, I mean, you'll be happy to hear. So the question obviously has got a bit of an ESG theme, and it's in terms of people and planet. And I just want to make it maybe slightly more specific, because that could be a 2-hour webinar by itself. So maybe if there are 1 or 2 major, initiatives underway from a planet perspective, some of which probably have a cost saving attached to them, I would guess. And then from a people perspective, and this is something I've always wondered, it must be quite difficult to manage a business where, the decision to, let someone go because they can't pay their fees means a child is no longer at that school. It's not an easy thing. The decision to grant bursaries, for every bursary you grant, it obviously hurts your margin, but it lets someone go to that school who is deserving, and I've noticed bursaries as a percentage of revenue has come down a bit. So I guess just any commentary around people and planet. I think for you guys, it's particularly difficult to balance off the people angle, but it'll be good to hear your views.
Well, thanks. And you're right. It's one of the hardest things that I certainly have had to do is first to terminate long outstanding accounts if people can't pay or service them. So it is hard. It's tough, but I think we can't offer a service for free. That's true for any service and anything in the world, really. So I guess you can take an objective kind of stance on that. And there are other options available. It's not like so people can go to other schools if it comes down to it. But I think when you talk about sustainability, I mean, in this debt package that we recently re-leveraged or refinanced last year, there is a sustainability overlay to that, which inter alia kind of looks at the quality of the matric results. It looks at the transformation of staff, and it looks at water consumption, and so I think and electricity consumption. So I think we've got some of that already plugged into our system. And in many ways, I would submit that a business like Curro is like one of the most important sustainable practitioners in the world, because what we do matters. We're busy with preparing learners for tomorrow, and best we do so as well as we can, because they're going to have to face all sorts of sort of challenges. So I think from that perspective, we certainly, from an environmental sustainability perspective, are quite tuned into this kind of stuff, and it matters, and it matters in our kind of curriculum, and it matters in how we behave. I mean, yeah, I think overall it is, it is a business, but it's when you kind of walk on the corridors and you kind of spend time on campuses and you've got 73,000 learners bowling you over with their potential and their talent, it's pretty easy to care about the humans, and to make sure that they do the best they can. So I think we're quite proud of the sort of impact we're having, but we've got much more to do.
Cobus, maybe if we just stay on the people side, we know that the teaching fraternity or body in South Africa is aging, and a lot of them are heading for retirement, and we're not producing enough new teachers to kind of cover the shortfall. And I mean, if I know of the amount of teachers I've seen in my kind of local schools that have gone to Dubai for an experience, or private schools in Asia, and they're also part of this immigration story. But in terms of retaining staff, finding staff, both now and kind of looking into the future as we kind of push. I think 2030 is kind of going to be the peak kind of challenge. Is that something you're worried about, something you're seeing, and trying to put measures in place, whether that's kind of doing internships and really getting younger teachers and graduates into the system at Curro as soon as possible?
Yeah, I think there's all sorts of nuances to that. I mean, I think the issue of aging of teachers and availability of younger teachers is kind of well documented and reported on. But I mean, I think the opportunity for us is that we have a sophisticated large business that can really invest and train and teach and work with people to get them into the profession and to make them successful within the profession by giving them every possible aid and opportunity and training and development that's required. So from that perspective, I think there is a bit of pressure building. I think teaching is a much more transferable skill globally than people may realize, and so there is pressure to hold on to top talent in key subjects like English and mathematics and science and so on. But I think relative to the larger sort of portfolio of the country, we have kind of, what have we got, kind of 0.5% of learners, and if you take the whole of private education, we've got kind of 5% of learners. So I think the availability of teachers to some extent is going to come down on how well an organization you run, how well you remunerate, and how much opportunity you can provide to them. And I think that's where we're focusing our attention.
Because I have one more question. Conscious of time, I think we need to wrap up soon. And my question is just around what consumers are looking for at the moment. I think you and Spur have exactly the same consumer base, but you teach the kids and Spur feeds them. But it's really all the same people. And obviously, we've seen some pretty good numbers out of Spur. We've seen some pretty good numbers out of you. But at the end of the day, there's this definite trend, and it's not just here, it's internationally, of higher interest rates, consumers under pressure looking for value. So my question is just, to the extent at school level, what do you think is making the difference? Like, why does Curro win versus a school down the road? Is it price? Are parents more interested in facilities? Are they very focused on academics? I guess my question is, how price sensitive is the South African consumer right now in terms of what you are seeing, specifically your customer base?
It's a hard question. I mean, if I look at our sort of collections and our bad debts and our debtors book, it's gone against the grain. I mean, it's gone against the kind of prevailing sort of theme that I see in other consumer-oriented organizations like the banks and the retailers. So, and I don't know if we just mistimed somehow, whether we have just really we've done so much in that space over the last two and a half years that maybe that's we're coming through it better at a hard moment. So there's that. So sometimes you get lucky, I guess. Then when you talk about what do consumers want, there's always how much do I have in my pocket, and then how much can I get for it? And I think we offer incredible value in many markets, and I think it comes down to what extent we can give every child the best possible opportunity to become the sort of best citizen and best leader and best professional and best kind of community member in that they can. So I suppose that's where our emphasis is, and I think we've been very, very I mean, you'll see it in our cost line. Some of our expenses have kicked on sort of nearly 20% because we were super focused on creating incredible experiences on our campuses. More sport, more extracurricular, more culture, more events, more tournaments, more academic support, more robotics, more coding, all of those kind of things as a composite, I think offers parents a lot of comfort that their children are in good hands. And I guess that's what we can control is that execution and that experience.
I'm just checking. Yeah, no, I haven't got any further questions. So, Ghost, if you don't have any, I think we might leave it there. We're coming 10-2 up on the hour, and I know Deborah has a few points she wants to get across as well. But Kubis, thanks very much for joining us. It was great to have you on here, and hopefully we can have you back on again and get a bit more deeper insight again.
Thanks very much, and thanks for having me. I appreciate the opportunity. All the best.
Thanks so much to everyone who participated today, and a special thanks to Curro for making the time to support this investor platform and to engage with our investors. We really hope you enjoyed this event, and if you'd like to listen to it again, a reminder that will be out on our YouTube channel soon. And really, please do subscribe to that YouTube channel for all the videos. And all that's left for me to say is to please join us for the next session of Unlock the Stock, which is taking place on September the 7th, and it will feature Harmony Gold. So please do keep a lookout for that invitation. And with that, goodbye from my side.